Good morning, legends. How is everyone feeling today? We had some pretty interesting price action on Bitcoin and really all markets last night. So we're going to get into that today and have a chat about that. We're also going to talk about what happens next, because a lot of people wanted a pullback. A lot of people expected a pullback. The pullback came sharp and unexpected, which was something I told you guys to prepare for on this video, on this channel. And now we have to ask ourselves, is this a pullback or is it a full-blown reversal? And the main question now is, where are the buyers going to actually step back in? Or are they gone completely? So that's what we're going to talk about in this video today. If you are new here, welcome. If you are returning, welcome back. Be sure to hit that like button nice and early, because it does help to get this video around whilst we are still live. And also subscribe if you're not already subscribed. And hopefully you will learn something new on this video. So who have we got in the house today? Shane, how you doing? Johnny, Hema, Janet, Adam, Kevin, Rata, good to see you guys here. Smart Money, awesome to see you all guys here. The good news is I have changed rooms now. I'm in a new hotel in Dubai, and this hotel has a balcony where I can keep the door open, and definitely the fresh air really helps with my cough situation as opposed to being in completely enclosed places. So hopefully there will be we'll aim for no, but minimal coughing on this stream, and we can just get down to talking price action. Lewis, just found your channel recently. Welcome. I'm glad that you are returning. Hello from Latvia. Nice to see you, Period Matrix. Smart Money, are you living there or what? No, I'm here till the end of January, and then potentially returning, to make the permanent move, but I haven't fully decided that yet. But I have to tell you, I really do like trading the US session. Being able to trade UK and US and having that on my time zone, as opposed to in Australia where US is like the middle of the night for me. It does make a very big difference. So, and also it's a bonus for our community because, you know, my team is there covering Australia and UK, and then I'm there able to cover UK and US. So we literally have, traders in there 24/7 helping no matter where you are in the world and wanting to learn. So you can consider joining us as well, but don't do that now. Let me prove to you that we are worth joining. And the first problem I have is I have to find my mouse, but here we are. Okay, Johnny, I really do like you being in Dubai. I know you're also selfish in the community. You're like, yes, Addie, permanently move there. Okay, so let's have a look at this. Now, yesterday, God damn it, we got one out. Yesterday's video, if you happen to catch it, we were saying that, you know, we were in a position where Bitcoin was creating a very bullish pattern, and we had many touches to the upside, and we literally had to be prepared for a breakout either way. It could have just as easily broken to the upside as it ended up breaking to the downside. Our conditions were that we had 1, 2, 3 hits. No, sorry, it was before that one. We had 1, 2, 3 hits to the high over different sessions here. So the condition was going to be that it breaks out of this up here if we were to go long. And the number 2 condition was going to be a break of the 50 EMA, which is equal to this yellow one that we're looking here. I'm on the 15 minute time frame right now. And this is the 200. So the 200 EMA on the 15-minute time frame is equal to the 50 EMA on the 1 hour time frame. So if I zoom out to the 1 hour, the reason we wanted the break of the 50 was because when we have a look at this whole run up here, the 50 is now the blue line here, the price just continued to hold it. And we talked about the trend yesterday. The trend is your friend until it bends, and this was where it was starting to bend. So it was a caution to look out for a 50 EMA break and retest on the 1 hour time frame. And now when we go down to the 15 minute, you can see, let's talk about the 2 types of entries you could have got for this. So number 1 is, and these were entries that many in the community got. Number one was this here, these three, I think they're called three soldiers, I don't really know, but these three green candles that hit to the high in a row like that, they happened at the news event. So that was the release of the PPI. But when you actually watched it live, although they were moving up with volume, they really were struggling to get, too high. So it definitely was a case of end of UK session market maker selling to retail. And you might say, but hang on, price went up. What do you mean they were selling? Well, when price is going up, the market maker is selling to you. The people buying are retail. So a lot of retail may have considered this here to be resistance as we know it. And as you can see, let me draw it properly so you can see here. So retail traders would have had this level here as a resistance line, and breakout traders sometimes have pending orders that they put just above that line, and that would have caused price to break out here, pick up those pending orders, and then if you do remember for the last couple of days, I said when the move comes, it should be sharp and fast, which is why I didn't like this for an area to take a short, because it just wasn't sharp and fast. They drop it fast. And the reason that they do that is because they don't want to give these breakout traders time to cut their trade. It just comes unexpectedly all of a sudden. They let you believe you were right, then bang, they just reverse it on you. So not to bag breakout trading or anything, like it's a good strategy, but it's only a good strategy at the right level, being level 1 and 2, and this was a level 3 rise, so that is where it's a terrible strategy. So we got that 100% manipulation by the market maker with the fake move to the upside now to trigger the final pending orders, and also stop out anyone who was short as well, because in addition to breakout traders having long positions above that line, short traders would have entered anywhere in this consolidation, had their stop loss. Let me kind of draw it out. Let's just say they entered somewhere here. Usually their stop loss is just above the resistance line. That's how, you're traditionally taught. Excuse me, I just have to do one thing. You guys know the glitch in the Facebook system, and I just realized that we are not publicly live there, so just sorry to interrupt. I just want to edit that. Excuse me. It's very professional on this channel. If you're here for the first time, that's how we roll. But this is a short position that people who trade off support and resistance, they would go short at resistance and long at support. So this would be a trade setup that type of trader would have, and as you can see here, they get stopped out and then price actually goes their way. So if you know any traders who are like, oh, I always get stopped out and then price goes my way, that's why, right? That's why. That's intentional. And yes, it's very much intentional trap, and support and resistance is put there by market makers for that exact reason. So now that you know everything that went wrong for them, let's talk about what went right. If you understand this method, after you had that fake move to the high, there's two ways that you could have entered this. The aggressive entry, which really should only come if you're very experienced, is at this point in time you drop down to the 5-minute time frame, because you know that this is a spike high trap move, and the 5-minute will often, not always, sometimes it can just be an inverted V and you don't get it, but the 5-minute will often then give you the M formation when it is that spike high trap. So we can see here, that's where we got the M formation with the stop hunt on the first peak, and that there is your aggressive entry to short. So you may have caught that already, but if you didn't, it doesn't matter, because the second entry, which is the more conservative entry, was the break and the retest of the 50 EMA. So price broke here, then it did come up and move up with speed back to the 50 EMA. But at the end of the day, it can move up fast, doesn't even matter. As long as it rejects that 50, which is the blue line there, that is the conservative entry of this method. So 2 opportunities to get in on that short depending on which one suits your personal way of trading. Then what happened from there is this becomes the first target down here when we had this initial break here, because this was the most recent unrecovered vector, and price just broke right through that. It didn't even care. It just annihilated it. So that's okay. We then move down to the next area of interest. So we literally just scroll to the left and look for the next vector, which was this. So we can see nice big green high volume candle. By the way, this indicator that changes my candle colors is an indicator that we have custom designed for our community. It is free if you are a paid member in our community, but if not, just come join the community, because then you can learn this whole method and get the indicators. But just another hack that you can use, there is an indicator called PVSRA. I'll just type it in here so you can see it, PVSRA, that one there, volume, and you can add that. It's similar, not exact, but it's similar to this. So that helps you identify the high volume candles that we assume are the market maker, because only the market maker can come in with that much money in one spike. And not every colored candle is that. You then also need to have a look at the volume and make sure that there is a volume spike there. So as we can see, this here volume spike is this area here. So yes, that confirms to us that that is our next area of interest. You would also assume that there is going to be an imbalance there if you were to use the volume profile tool or something like. You don't even need the tool, because you can assume it's going to be there because you can see how fast it moved. So that becomes our next target. And then in addition to that, what I sort of like about it is that it does line up currently with the 800 EMA, which, that would be the next sort of level for what we would expect to follow a level 2 and 3 drop. Here's the problem that I want to point out to you guys. And that is, anyone who caught the short needs to understand that we are potentially at this point in time trading against the trend. Now, as day traders, that's okay, because you just get your 3 drops and you're out. However, we at this point in time, it has not been proven that we're in a new uptrend, right? And this is what we were cautious of this whole week on this channel, was that until the breakout to the upside comes back, retests and creates a higher low on a daily time frame, we can't actually say that the bear market is over or that we have a new trend, etc. However, at the same time as that, it's also very, very possible that that was a fake rally to the upside and actually the bear market is still here. So that's why we were looking for shorts on this channel at the right time, because just in case it turns out that that was a fake rally in a bear market, we are now very well positioned in our short for it to go to wherever it wants to go to in this bear market. But what we need to be keeping an eye on now, as people who are currently in short positions, we need to be keeping an eye, zooming out every now and then to the higher time frame to have a look at where this might bounce and where the buyers may step in if this is going to end up creating a higher low and we end up having a new trend. Because if that's the case, that's where we want to bag flip. We want to take our profits on our short and switch over to a long position. Now, the heat maps really help us with things like that, especially in this sort of a situation where we're in the moment of, is it an uptrend or a fake move? And so what we want to have a look at here, now, the way that this works is we've got where it says the numbers here, 1.2K, for example, in the red box, that's 1,200 Bitcoin worth of orders on Binance futures alone. So you would go 1,200 times the current price, or the price that they want to buy at, 20,500, and that gives you the US dollar value of how many orders are actually at that spot. So the more we move down in price, like, you know, when Bitcoin was at 15, 16, 17K, though that number is going to be a hell of a lot higher because the mathematics would work out to the same US dollar value. Now that we start to move higher and we're, you know, fairly close to 21K, it doesn't have to be as high because less Bitcoin at a higher price is going to equal a higher US dollar value. So I hope that makes sense. So the moral of the story is around this sort of price level, what we would consider to be a high amount on the heat maps is around the 1 to 1.5K mark. So those are the kind of orders that we're looking for. And we're really only interested in the current candle because anything left are orders that were screenshot and left behind when the candle closed. So they're not relevant to us. We want to know right now and moving forward, where are people trying to either A, short this or long this? And what is the bias? Because at the end of the day, again, like I said, are people now turning bearish or are they now thinking, yay, I have a chance to buy the dip? So this gives us a very good idea of sentiment. And what I want to point out in this is when we have a look at those orders that are above the 1K level, you can use your slider here to make them stand out even more. But here we can see we've got this level here underneath the current price, which is at 20,500. And then we've got this level here, which is at 20,250. So those two levels are significant for today, remembering that these are limit orders. So just the way you go and place an order in your exchange, and you can cancel that anytime before it gets filled, so can these people. So you always have to keep that in mind. But at this point in time, 20,250 to 20,500 is looking like the area where people want to step in and make sure that we do get a higher low and that, you know, we do have a new trend from here. When you compare that to what's above price, we don't have orders that high. So no one's necessarily, I shouldn't say no one because there are orders there, but majority of people think they're buying dips right now, which is very important to know. Now, more at any time, you know, bearish news could come out and whatnot. And I think we're in a very fragile state when it comes to retail sentiment, which is, you know, definitely worth studying because, you know, I don't know if it will take one little bit of bad news for them to completely switch and say, no, this was fake and everyone wants to start shorting again. The other thing too is when you look at this order book here, this second last column that is red and green here, this basically shows you a bias because what it is, it's the delta between people who are buying and selling both above price and below price. And so if the delta is mostly red here above price, people are fairly bearish and wanting to push price down. And then below price, it's mostly green. So people are fairly bullish and wanting to push price up. But what you want to, this not giving us the right signal right now. But if you do have heat maps and you want to get good at them, which I fucking highly suggest, to be honest, is definitely a game changer. But this here is a very important column to watch because when both sides start to turn the one color, then you really understand the sentiment. So, and then also the number. So you can see that you might not be able to see it that clearly on the screen, but moral of the story is that the larger numbers very much are below price at this point, still believing that they're going to get their high low. So now that we have that 20,500 and 2250, let's see where that actually is on the chart because our next step is we want to line that up with a vector. And potentially an EMA if it's in the right, there you go. We copped it exactly right. Because then that just makes that's the level, right? That becomes the absolute target. And the other one is, so that's 20,250. 20,500 is the other level too, which makes sense because it's a return to the candle close of this initial drop. Here's what I want you to watch out for now today if you are in a short position, because there is something that bothers me about this current move right here. And that is that, let me find my drawing tool. That is that this here has the potential to turn out to only be a H pattern that only returns to this level and then we continue up. That is going to be very dependent on how bullish retail remain, right? So be prepared for that to be the lowest that we get. And considering there are orders there too, it adds to that, and definitely need to wait and see. But if you are short, be prepared to bag flip at that level should we return to the 20,500 kind of region and get very bullish candlesticks out of there. Be prepared for this to just be a H, because retail might be irrational right now. Because don't forget, if we zoom out on the 1 hour time frame, don't forget how many people, and you yourself watching may have been one of them. Undo that, that during this move here had major FOMO that they missed out. So these people here who had major FOMO may be willing to buy at 20K. They may consider that cheap, and we can't assume that we're going to retrace all the way back down to a nice 18.5, 20K region. We really just need to now start watching vector candle recoveries as they happen and which one of them gives us a really strong bounce out of it. I personally would, if this is going to be a sustainable new trend on a higher time frame that, does become a new uptrend, I would want to see a deeper pullback. But we can never underestimate how irrational retail traders are. The other thing too is you now have to start to ask yourself, how do traditional traders, start to decide where they're going to buy back in? And a lot of them will use fibs, for example. So they'll draw fibs from the bottom to the top. And let me just change this. And then, they might have level orders at the 38, the 50, and the 61. Some fib traders just put orders there. Some of them have a level. They're like, I just wait for it to get back to the 50% line and that's when I buy in. I think that's the dumbest strategy ever, but that is how some people trade. And then others will draw their fib level and they go, which one of these three line up with a previous support or resistance? Also a trap, as we discussed, but that's how they do it. So there may be that as well. So at the end of the day, what we need to watch for first is our area of interest is very clear, that as an area that we want to recover if we're actually going to have the 3-level drop that we want as part of this method. And that is going to be that we want to see level 2 come back down to this 200 EMA on the 1 hour time frame, which is between 19,890 and 20,300. But if that turns out to actually happen, we get that deep, and we get that deep on level 2, there will be one more drop to come. So hold on to your short is the point. The point in which you're going to decide to exit your short is going to be if we cannot break the 20,500. That is going to be your hint that retail are extremely bullish. Or even, I shouldn't say 20,500, the whole range of 20,005 to 20,250. If we cannot break below that, it's also going to be a retest of the 200 EMA. So if we cannot get below that, consider bag flipping your short and go long. That's pretty much how I feel about that. Now, anything else you chart is going to be exactly the same, which is why I don't tend to go through too many alts on this channel. But we do cover alts in the Discord, so be sure to check that out. My team are amazing at doing alts there. But you can see here how it's exactly the same situation. We had the breakdown, broke the 50. We're potentially forming a H pattern here. We've got this unrecovered zone that lines up with the 200 EMA. So this area here for Ethereum, 1450 to 15, say 10-ish is the level to watch next. If we do get our level 2 drop and it breaks through that level, worth hanging on to. But if we only revisit the 200 EMA and start to get strong bounces, reminder, I'm on the 1 hour time frame as I say that, then just be prepared that retail are irrationally buying in, and we might not go as low as we actually want to. That's pretty much all I have to say, I think. Let's have a quick look at these delta levels and what that actually wiped out last night. I'll just run this again for Bitcoin. And I'll have a look at the questions whilst that's loading. Oh, here we go. Wow. Very interesting. Well, we'll have a look at the other one in a second, but there's a chance that one move last night literally wiped out all that delta that we were talking about. Actually, look at this here. We had over the last, the move up and into the weekend, it was one short trader to every 4 long traders. So it was like a 4-to-1, right? Now we're under a 2-to-1. We're under a 2-to-1. So yeah, that's very interesting. Wiped out a lot of delta. Look here, there's liquidity either side of price, and actually there's probably more now to the upside. So yeah, I'd be very, very careful about waiting for those fib levels in order to get into a long position if we can't break those levels that I spoke about, because it's just going to be another trap to not go down that deep if they still want to continue to cause FOMO, and have people think, oh no, I'm not going to miss it for a second time. Then they're not going to bring it deep enough to give you the perfect entry. So just be aware of that. But yeah, there is liquidity either side. So we definitely want to see if those levels we previously talked about break. Let's go over the 7-day heat map. What have we got here? So we've got a very high level. Actually, let me zoom in on this. This is impossible to see. Can you guys all see that? Yeah. Okay, so we've got now a very high level that's opened up at 21.7. And so what that would mean is that is where people's liquidation levels are, which means that they must have shorted. So that's the liquidation level for people who went short. If price returns there, it wouldn't be too hard to return there, to be honest with you. Below price, we don't have a lot at this point. So I don't think many buyers have committed to push price up, but I'd be interested to see if these levels here start to grow, if price does come back to that 20.5 and 22.50. I might do a Twitter update if that actually happens, because it will happen, before my next YouTube update, because today's the last day of the week that I do them. So keep an eye on my Twitter if you're not in a Discord, but also just be in the Discord. So 20,200 is a fairly high level, which means that if they did bring that price back down into that 20,000, into that vector, let me show you here. Wait a second. Let me go back to Bitcoin. If they did bring price back down into here, into the 200 EMA zone, then they would wipe out these people here who longed but actually weren't wrong, but just had shitty stop losses or too high leverage, which would also allow them to collect contracts before then making the next move to the outside. Do you guys see how it's all just such a liquidity trap? It's all just a liquidity trap. But if you can learn to read it, the market maker does not care where price goes, up, down, couldn't care less. It's all about what is available for them to profit. And if you can learn that, then you can be on the same side as them, as opposed to the liquidity that they take. That is my my mantra for the day. And, I'm pretty much done with everything there. So do you use footprint charts in the right time? I use them. All right, so I think that's all I've got for you today. Have an amazing weekend, and I'll see you guys next week. But yeah, just the levels to watch out for. don't assume that we're going to go straight into 3 level drops if you're short, because retail are irrational. I will see you guys. Smash the like button if you learned something. Don't forget to hit subscribe. Consider joining us down below to learn this whole method in full. And also, if you're looking for an exchange to trade on, my preferred is OKX. Check out their website first. Check out the audits. Make sure you're happy. And if you are, there is a link in the description to get 15% discount on fees. Awesome catching up with you guys. Have an awesome weekend, and I will see you next week.